I'm Yahoo Finance Executive Editor Brian Sozzi, and you're taking a look at a live shot of the opening bells on Wall Street on this Monday morning. H&R Block celebrating 70 years of being in business by ringing the bell at the NYSE. You can see that big mascot. I think that's a tax man. I'm not sure if that's his name, but calling out that mascot. Big fan of corporate mascots. Over at the NASDAQ, seeing ADMA Biologics ringing that bell to kick off this week's of trading. Now, this is traders return from a summer weekend having one hand over their eyes as Trump tariff fears ratchet higher. President Trump has threatened 30% tariffs on Mexico and the European Union. Said Deutsche Bank strategist Jim Reed this morning, Trump is under less pressure to back down with U.S. risk markets around their highs and bond markets relatively stable at the moment. Now, on Opening Bid is all about serving up investing analysis you need to know to unleash the power of your portfolio. We're digging into what's really moving stocks, giving you the unbeatable context to make decisions with all that money in your portfolio. Let's get over to Yahoo Finance senior reporter Brooke DePalma at the NASDAQ in Times Square. Brooke, while tariff fears are weighing on stocks, again, the crypto space continues to move up and to the right. We've seen some news on Kenvue with a CEO shakeup.
Good morning, Brian. That's right. Bitcoin surging to an all-new time record high as the major indices open at the opening bell here, roughly flat, down about 0.3%. The Nasdaq moving slightly higher after we saw them reach record highs as investors really digest three key things: those trade tensions that currently re-escalated over the weekend as President Trump announced that he plans to impose a 30% tariff on both Canada and Mexico. In addition to that, we have this CPI report, Consumer Price Index report, out Tuesday morning. Investors certainly keeping a look on that to gauge the current rate of inflation. And lastly, we have the first wave of second quarter earnings coming out this week. Big banks kicking off, and certainly later on in the week, Netflix kicking off a big round of big tech earnings. And as we heard it right, really investors are trying to understand, is this an escalation to de-escalate? That's what Mohamed Alarian just told Yahoo Finance's morning brief. Is it that Trump is really leading or hoping for negotiations to come underway, and when August 1st hits, we won't necessarily get these huge tariffs that was similar to what we saw back in April? In addition to that, I also want to take a look at the VIX. Of course, that's a volatility index. In pre-market, it was up roughly 10%. And now as we make way into the market open, we're seeing that up about 10% as well. And that really means that's a fear gauge index here. And so what we're really seeing that is investors are really uncertain about how this all plays out. And I want to get to that latest ticker, Kenvue. Shares of that are up nearly about 5% in early hours trading this morning as investors really understand that we have a big shakeup there. We have the CEO stepping down, and we have an interim CEO, Kirk Perry, who spent years at data analytics platform Circana, stepping into the role on an interim basis. And what we know is that that company spin off from Johnson & Johnson in 2023. It's really looking to get its footing here. Investors certainly pleased as that company also explores a potential sale of its beauty brands. Kenvue is behind names like Neutrogena, Band-Aid, and in addition to that, Tylenol. So a lot of household goods that could be getting a bit of a shakeup here as well.
Yeah, hopefully Kirk can improve the taste of that Listerine, Brooke. It's not good. All right, Brooke, I'll see you on the roundtable in a second. We're kicking things off with your daily guide to the biggest market drivers of the trading day. Here's what I'm watching. Number one, the tariff man had a weekend. President Trump has threatened 30% tariffs on the European Union and Mexico starting August 1st. Mexico and EU leaders said they will continue to negotiate with the Trump administration this month before that date. The renewed tariff push by Trump is slowly beginning to chip away at the optimism that has powered stocks to record highs, with an emphasis on slowly, as investors still believe corporate America is weathering the trade storm well. Number two, another Wall Street firm is lifting their S&P 500 target. Our RBC Capital Markets strategist Lori Calvasina increased her year-end S&P 500 price target to 6250. But unlike more bullish calls this month from Goldman Sachs and Bank of America, Calvasina is only neutral in stocks into the second half of the year. She said she sees, quote, choppy conditions for stocks as the year winds down. And number three, the earnings blitz begins this week after a small taste of the storm last week from Delta and Levi's. JP Morgan, BNY, Wells Fargo, and Citi all report earnings on Tuesday. Later in the week, we get results from Bank of America, Taiwan Semiconductor, Netflix, PepsiCo, and American Express. The bar has been set surprisingly high for earnings season following well-received reports out of Delta and Levi's last week. So far, 71% of S&P 500 companies have reported a positive EPS surprise, and 81% have reported a positive revenue surprise, according to the folks at FactSet. All right, now let's fire up our roundtable for today. Christian Mamani, Lafayette College Chief Investment Officer. Michelle Snyder, MarketGauge.com Chief Strategist, and Yahoo Finance Senior Reporter Brooke DePalma is back here with us. Christian, let me start with you here because you're finally starting to see the markets react a little bit more to these trade headlines. How much more can investors stay complacent?
Well, so I think saying that the markets are reacting in a big way to trade surprise is a bit of an overstatement, in my opinion, because it hasn't really moved. I think what it has done is basically somewhat capped the upside momentum that the market had because of good underlying data. So, you take earnings for this week, financial earnings are probably going to be quite decent. Underlying growth trends are okay. They're not spectacular, but decent considering everything. You have OBBB passed. So I think the risk picture was lower and market would have gone higher. Now it probably won't because of tariffs.
But Christian, does valuations matter to you in this environment when everything seemingly is going up?
Valuations always matter, but I think looking at valuations to kind of divine the near-term direction of the market has always been a folly in my judgment. So yes, valuations are probably on the richer side, but given what they have done since April, if the trade issues weren't in the picture, we probably would be going up nevertheless.
Michelle, you're my chart master here on the roundtable. One red flag that Goldman Sachs highlighted over the weekend: narrow market breadth. Break that, what that actually means, and is it a red flag to you?
Well, what they're referring to is only 63% of the market is over the 200-day moving average. And so we have another, to overuse a word that we've seen a lot in the first half of 2025, bifurcation potentially happening. And I think that that could be a concern, but there are certain factors, obviously, from a technical standpoint we have to watch. And one of them would be how the retail space is doing relative to the semiconductor space, because we've seen that spread continue to widen where growth just keeps leading and leading. We had a lot of people think that value was going to be the thing this year. We haven't really seen that take off. So I would look for, and I like to use XRT as my indicator because it's discretionary and also consumer staples. I'd like to see it stay in the game here at least at around 78, 80 if we're looking at a chart. And if that's the case, then this red flag seasonally, we're a little bit in a weak period, end of July, but it shouldn't be anything more than maybe a good correction and maybe a buy opportunity.
Michelle, what sectors are you seeing overbought conditions?
Well, one could argue right now that some of the metals that have really rallied tremendously over the course of years, not just this year, might be at a bit of an overbought period. Like, for example, silver got to almost 40 overnight, can't quite make it through. Gold has been struggling to get back over 3,400. Copper had a big move. As far as the rest of the market right here, I mean, you have to always wonder whether something like NVIDIA is overbought, but we know with something like NVIDIA just is the reign supreme, so I wouldn't even venture to say that. In terms of the overbought conditions, there are so many things that are so undervalued at this point relative to the things that are overbought. That's what I would choose to focus on here. What has a chance to go higher? And I think the energy space is probably one of the biggest areas that I'm focused on right now.
Christian, where do you see pockets of undervaluation?
Well, I think she just talked about it. The energy is probably the one sector that has lagged the market significantly, and I would say even the consumers, consumers sector has probably lagged the market just as much, not to the same extent, but significantly. Those are the two areas of the market that are undervalued. Having said that, I think in this sort of market, focusing on undervalued sectors, again, may not work out according to plan.
And Brooke, as we're watching this trading activity, Bitcoin and crypto continues to go through the roof.
Absolutely, they sure do. We're seeing that extend into early hours trading here. Bitcoin up 2.3%. We also have Ethereum off of the back this rally, and Bitcoin up about 2% in, right at the open here. And we saw Bitcoin cross 120,000 for the first time. That certainly has investors excited. But what we're looking out for is this crypto week, as the House of Representatives is calling it, where we expect these three really crypto-friendly bills to be assessed by the House this week. Ultimately, that's the Genius Act, we have the Clarity Act, and the Anti-Surveillance State Act. And what we know is that investors here, when it comes to Bitcoin, they've been seeing that as a safe haven play and all this uncertainty that's been playing out year to date. But what they really have also been looking for is some sort of regulatory risk here. And certainly with this latest move, there's some optimism here that as this crypto week, so-called, gets underway, we'll get a bit more of that.
I'm going to wrap my last 2 points all into one. That is the RBC target price increase on the S&P 500 to 6250, calling out choppy conditions, and then really the start of earnings season. Christian, what have you made from the early start of earnings season? Of course, we had Delta, Levi's, not only beat, but offered upbeat outlook. I think that surprised a lot of folks, but by the same token, now we enter with higher expectations right into the harder earnings season that it might just be hard to meet that given everything going on in the world.
Well, so I would say earnings outlook remains quite robust. And the fact that we are beginning this week with financials, I think financials are probably going to have gangbuster earnings. So I think that's a good setup for the market. And if you look at underlying growth and revenue growth and underlying economic growth, there's really no reason to be too concerned about the earnings outlook for the time being anyway. I think the longer term picture changes with what happens on the tariff front, but not immediately.
Michelle, is second quarter earnings season for the banks already priced in?
Well, I actually agree with Christian. I think that they'll probably be optimistic. A weaker dollar, by the way, has been a great tailwind for earnings coming into the season. But besides the banks, we also have TSM and ASML reporting this week, and that might give us a better idea in terms of your question earlier, are we into overbought conditions in that whole chip semiconductor space? But I find earnings in general, for me, are more backward looking. They set a stage, but they don't necessarily always have an impact as much as expectations going forward. So we'll be listening to the guidance.
Michelle, what's more important to see? Is it beats and upbeat guidance out of the banks or strong results and guidance out of a company like Taiwan Semiconductor, which is right on that leading edge of AI chips, and the things they sell today are going to help lay the capex for the next few years?
I would say the latter in that case, and especially since we've all had a conversation about energy. People cannot forget that with AI, and if we continue to see the robust earnings and the growth area continue to soar, which at this point looks like it's going to, something's got to fuel it. And we know right now that energy has been a concern. And when I talk about energy, it's not just XLE, but we're looking at oil, which is a surprise to the upside. Coal actually got some kind of a benefit from BBB. And even though the tariffs, not the tariffs, but the taxes on solar and wind are threatening to go away, that they're going to be needed. So that's where natural gas, I mean, all of that is something that has to be watched now, especially after the earnings, if AI continues to surge.
Christian, in your portfolios, how much of an allocation do you have to the AI trade here?
Well, so again, at the college in our endowment, we have a strategic asset allocation, which is benchmarked against MSCI ACWI. So we don't really have a significant overweight. Where we do have significant overweight is basically in venture private markets. And there we have a significant allocation in AI-related stuff, primarily through our venture VC partners.
And of course, you can check out all that private markets data on Yahoo Finance. Very interesting part of our platform. Straight ahead, Best Buy gets nailed with a downgrade as the stock continues to have a dismal year. I have the details behind this one, and we'll serve up our stock of the day. Your clue, the founder has a reported net worth of more than $16 billion. Just a little bit more than me. Welcome back to Opening Bid. I have those details on Piper Sandler analyst Peter Keith's downgrade on Best Buy today. Keith taking his rating down to neutral from overweight or buy equivalent. His explanation is rather straightforward. Says Keith, we don't see any meaningful catalyst in the coming quarters to meaningfully accelerate comparable sales and growth. And we have longer term competitor concerns around Best Buy's appliance and TV categories. He calls out Walmart, their acquisition of Vizio, potentially being bad news for Best Buy. All right, let's turn now to our stock of the day, and that is Coinbase. As I mentioned in my clue, Coinbase co-founder and CEO Brian Armstrong is worth a cool $16 billion, in part because of how much his stock has risen. Coinbase shares up 80% over the past year. The stock is at record intraday highs today as Bitcoin prices hit a record of 120,000 and Crypto Week kicks off in DC. Legislators will begin debating on key crypto legislation that could be favorable to the industry, notably the Genius Act. I recently asked Armstrong about his thoughts on the regulatory landscape. Here's what he told me.
I think regulation will be a huge boon for crypto. So I very much, we are actively working all over DC, our policy team, and with this administration to try to get legislation passed. We think that that's how we expand the TAM of crypto. And frankly, that's why a lot of people are now coming into crypto, because they're seeing that regulatory clarity is on the horizon.
TAM, of course, short for total addressable market. Still with me, my roundtable, Krishna Mamani, Lafayette College Chief Investment Officer, Michelle Schneider, MarketGauge.com Chief Strategist, and Yahoo Finance Senior Reporter, Brooke DePalma. Michelle, I want to start with you because really, Bitcoin has taken off the past week, 2 weeks, even the past month. Any signs of fatigue that you're seeing in Bitcoin, Ethereum, really, I guess, at all across the landscape of crypto assets?
Well, I was always looking for a 125 target, so we're darn close to that. But that doesn't necessarily
Time to raise your target, Michelle. Let's get the new target on Yahoo Finance, 200,000 maybe.
Well, I tend to be a little bit more conservative in my calls for things, although I have been also known to make bold ones. But in terms of Bitcoin right now, 125 is really where I'm looking at. But what I'm really interested right now, believe it or not, besides Ethereum, which has exploded over 3,000, and that's fantastic, I really like Chainlink. It has made a huge move over the last week. It actually was starting to make a move even before Ethereum did. And if you look at a chart, since that's what I do, right now it's sitting right at a 200-day moving average. So I'm talking about LINKUSD. And if it gets through there, it hasn't been since January, we have a really interesting setup where this thing can go much higher. From a standpoint of what Chainlink does as a bridge between what's on the blockchain and what isn't on the blockchain, it actually brings that access to the blockchain. That is a future growth area anyway in the whole space from a more fundamental standpoint. So yeah, I think I don't see fatigue in some of the altcoins. Like I said, Bitcoin will see around 125. I wouldn't necessarily get out, but I would certainly be looking at holding at 120 now, somewhere around that 118, 120.
Yeah, just seeing, Michelle, what Brian Armstrong, Coinbase CEO, is working on. Really laying the foundation for a very strong, fundamentally oriented business. But let me just follow up on some of the things you said. What is the better trade? Do you trade some of these altcoins, and look, they are very, very risky, or do you go into something more, I guess, a proven commodity at this point, no pun intended, in a Coinbase?
Well, that's interesting you use the word commodity, because as an old school commodities trader, what's so great about all the altcoins and Bitcoin and of course being the kingpin Ethereum and Chainlink, Solana, all of it, is that they're so highly technical. So they're risky in that they're not investments necessarily, although that could be changing. With this mass adoption, all this legislation is just another feather in the cap of mass adoption, especially with Stablecoin and now Circle. That IPO proved that people are hungry for some kind of an access to like a credit card, so to speak, for Bitcoin without actually owning it. The point is that if you really can understand how to look at price action, especially on these volume surges, and take advantage and look at it more as an active investment, sort of almost a fun way to make extra money, then I think it's a great space, and that's one of the reasons why I love about it.
Christian, we've heard consistently of late, institutions are getting into crypto. Institutions are getting into crypto. Well, you are an institution. Have your thoughts changed on crypto compared to 6 months ago?
So I'll start by saying that I've been wrong on crypto for 15 years. So whatever I say,
there's always a chance to be right, Krishna. And today could be
I
that
know.
day.
But I think the point that was made earlier was a really good one. That is, if you want, if you're going to be playing in crypto, you have to play it the way the commodities folks play it, which is, this is really not an investment still, despite all the talk that we hear about changing landscape and things like that. This is still not an investment. It is a speculative vehicle. You can make a lot of money, as people already have, but it's not an investment. So we are not involved, and it's quite unlikely that we'll remain involved. The only place where I see crypto actually making progress is on the stablecoin front. But if you look at valuations of something like Circle relative to the potential amount of money that you could make out of stablecoins, I'm not so sure it's the right metric.
All right, it's time now for our question of the day, and here it is. Will big food ever see savory financial results and tasty stock price gains again? This is just, love this stuff. Look at what we've seen here in this space. Conagra Brands reported poor quarterly results owing to consumer pressure. PepsiCo earnings later this week are expected to be, well, bad or flat. Concerns around weight loss drugs have hurt that stock's multiple too. Kraft Heinz reportedly exploring a breakup. There are 2 separate deals on the table to buy 2 divisions of the legacy company that was Kellogg. And Brooke, it's hard for me to find what is going to be that catalyst for the top and bottom line results for some of these big food companies. Even if the consumer gets a little bit better, they continue to change how they eat and how much they eat.
Brian, what I'm hearing from my sources is that innovation is key here in order for these companies to offset all the major volume declines that they're seeing. Because as you're noting here, consumers' preferences have changed. They have to be willing to spend in this sort of dynamic. And so if these big packaged food companies, like say PepsiCo later on this week, can really understand the consumer and understand just how much they're willing to pay and what they're willing to pay for, that's really what could drive volume back up here. But as you noted, it's expected to be, a negative report here, largely due to the fact that consumers are buying less, and ultimately the cost of packaging, the cost of the ingredients are ultimately more in this environment.
Krishna, a lot of these stocks, these big packaged food plays, are trading at 52-week lows. That has pushed up what has historically been already attractive dividend yields even higher. Do you have any interest in trying to pick a bottom in some of these names, even just considering how far they have fallen and the yield on these stocks?
So I would say, these stocks have the potential of turning into the ultimate value traps. These are not the sort of stocks that this market is looking for, and therefore they are unlikely to do very well. I mean, from a long-term holding standpoint, given the high dividend yields, they may end up being really good investments for somewhat of a conservative investor. But if you are looking at it from the standpoint of these stocks keeping up with the rest of the market, this wouldn't be where I would be looking at.
Yeah, Brooke, who wants packaged Kraft cheese? You don't have to say it. I'll just say it. I mean, this stuff doesn't even look like cheese. Michelle, but at the end of the day, these are still consumer plays. As you survey the consumer space, is there anything breaking out or any moves of late that have caught your attention?
Well, to kind of pick up on what Brooke said about the changing consumer habits concerning food, I don't think we can discount at all the impact that is just beginning to emerge in the consumer market with the diet drugs. We are really establishing a new thin economy, and that's going to be a tremendous group of people who have suffered with obesity or just being morbidly overweight for their whole lives, now getting a chance of having a new life. And what does that mean? Well, in terms of these food companies, they're certainly turning less to junk food, turning less to alcohol, more towards healthy living. Obviously, in that consumer space, you want to be looking at what would happen to a person who finally is thin and can stay thin. So they would be looking to buy more beauty stocks, skincare, supplements, going to the gym, apparel for working out, certain types of retail chains that might make it easier for them to buy without having to go into a store. Dating. I mean, this is really where I'm looking at the consumer right now, because I've heard that 6% of the GDP can be added from just this new thin economy. These diet drugs are still expensive, but that doesn't mean they aren't going to get cheaper, more effective. And like, for example, a company like Viking Therapeutics working with a pill form. To me, this is such an exciting megatrend on so many levels.
Also, still expensive, relatively speaking, is that fake cheese. A big thank you to my panel, Krish Ramani, Michelle Schneider, and Brooke DePalma. Really good discussion today. Coming up, Yahoo Finance's Market Catalyst. We bring you the news behind the market moves for the trading day. Do stick around.